Hey everyone! Welcome back to another powerful lesson here at FX Jers Academy. In today's video, I will walk you through a clean and simple way to take high risk to reward trades using liquidity concepts and lower time frame precision. Let's get right into it. As you can see on the GBPUSD 4-hour time frame, I've marked a few key areas that build the foundation of our setup. First, notice the buy-side liquidity sitting above the recent highs. This is where the market is most likely to target. Then observe this clean break in structure to the upside. This confirms bullish intent. Now, look below. I've highlighted the sell-side liquidity resting under the lows, and just beside it, another double bottom liquidity formation. This tells us that the market might sweep that liquidity before continuing higher. Now, to refine our entry for a high R setup, I am switching to the 1-hour time frame. Now, zooming into the 1-hour time frame, you can see how the market dropped slightly and gave an internal break in structure to the downside, a clear sign that price was preparing to make a move. I've now highlighted our fresh 30-minute supply zone right here. This is where I placed my entry, perfectly aligned with my principles, and my take profit is set at the sell-side liquidity zones we marked earlier on the 4-hour chart. This is how you execute a simple 1:9 risk to reward trade. Notice how the market manipulates retail traders, fakes out early entries, and then comes precisely into our supply zone before dropping aggressively and smashing through all the liquidity levels below. This was the first example. Now let's move on to another powerful trade setup and show you again how to approach big RR trades with simplicity and clarity. Moving on to another powerful example, this time on the GBPJPY 1-hour time frame. Take a look at this clean break in structure to the upside that I've highlighted. This is our signal that buyers are temporarily in control. But before that, we had a clear break in structure to the downside, which showed us that the market had already been in a bearish phase earlier. Now, here's the key part. Look at this liquidity pool I've highlighted. This zone is stacked with retail buy stops, a perfect magnet for institutional players. This is the kind of area where the market loves to reverse, and that's exactly where our attention should go next. And now let's move to 15-minute time frame for the best risk to reward entry. Now, zooming into the 15-minute time frame for precision, take a look at this untouched demand zone I've clearly marked. I placed my entry right at the demand zone and my take profit at the top of the liquidity pool we identified earlier on the higher time frame. And what happens next? The market taps perfectly into our demand zone, gives us a sniper entry, and explodes upward, clearing the liquidity above. This is a simple 1:10 risk to reward trade, simple, clean, and high probability. Remember, it's not about chasing trades. It's about understanding structure, liquidity, and waiting patiently for price to come to you. That's how you win consistently in this game. This brings us to the end of this short but powerful video. If you found this valuable, make sure to rewatch, take notes, and apply it to your charts today. Stay sharp, stay focused, and I'll see you in the next one. Subscribe and press the bell icon. Follow us on Instagram for trade breakdowns and more, link in the description. Best of luck, bye.